Welcome back to Metals, Money, and Markets, weekend in July 14th, 2017. As always, I'm joined by Mickey Fulp, the Mercenary Geologist, and from miningclips.com, I'm Rob Goodman. Well, Mickey, the week before we were talking about a whole lot of red on the screen. This week, certainly a whole lot of black. Let's walk through it here. The metals picked themselves up a little bit after that disastrous little run they were on.
Yeah, it was black across the board this week for the most part. Gold started the week at a 4-month low. I think it hit something like 1207. But it rallied on Wednesday and Friday on New York Open. Both days up $10 on New York Open. Now, part of this was likely because Yellen comes in and indicates only one rate increase, and she made some comments about the poor U.S. growth and no end in sight. So that certainly was probably good for the precious metals. Silver and platinum both reacted the same as gold. Gold ended up the week at 1228, up over 1%. Silver 1595, up almost 2.5%. Platinum up 1.5% to 919. And once again, bucking the trend was palladium. It had a very nice week, but it didn't really react the way the other precious metals did. It finished the week at 854, up 2.5%.
Copper, modest gain, got back what it lost the week before.
Yeah, it had a nice week. Finished at 267 for 1.5% gain. You know, it's pushing up toward this resistance, which is pretty strong at about 275, and we've seen that also with a flattening of the forward curve. So it's going to take some catalyst to get copper out of this range bound 250 to 270 range.
Moving on to energy, solid week for oil.
Yeah, despite a rig count in the U.S. going up 12, we haven't seen that big a jump in a little while. Now the rig count's at 952. And get this, Rob, the Permian Basin, which has led this charge, lost a rig over the week. But despite bearish news, oil rebounded. It closed at 46.68 for over a 5% gain. OPEC's trying to lean on Libya and Nigeria with their exemptions on production cuts. I think there's some concern in the oil patch about lack of investment and what that's going to do to midterm supply-demand fundamentals, especially with this lack of investment. Older fields are depleting quite rapidly. We've got demand increases, and then the wild card here becomes Venezuela, which is starting to make noise about nationalizing its oil fields. Meanwhile, uranium had a nice week up, 37 cents to finish at 20.75.
Moving on to currencies, dollar off a bit, and as expected, the euro and loonie rally against it.
Yeah, the dollar continues to lose traction. It finished at 95 and a dime, basically, down 1%. Of course, the euro was up on that at $1.15, 14-month high for the euro. And the loonie really surged over the week. Went up to 79 cents, up almost 2%. Very good macro reasons for that happening with the increase in price of oil. And also the Bank of Canada raised its interest rate for the first time, get this, Rob, in 7 years. And it's now at 0.75%. It maintained a 14-month high, too.
Finishing up with the markets, nothing stops these markets. These U.S. markets certainly are flying right now.
Well, they continue to fly despite summer doldrums. Dow set record highs 3 days in a row. S&P 500 finished a record high on Friday. Dow 21,638 up 1%. S&P 500 24.59 up 1.5%. Nasdaq rebounded, had a very nice week with the techs 63.12 up 2.5%.
Finishing up with the venture, up a little.
Up a little, but apathy rules. Finished at 758, up 3 points on the week. But get this, Rob. A couple of weeks ago, we talked about very low volumes at 53 million shares per day. That dropped to 47 million shares this week. So I don't expect this to end as once again until after Labor Day.
Couldn't agree more. Okay, Mickey, look forward to catching up with you next week and getting your insight.
All right. Thanks a lot, Rob.